Hi, welcome guys to my YouTube channel, and this is my first YouTube video. So welcome to FXBase, where we analyze some forex, crypto, and some indices as well as synthetic indices. So the main goal is to actually teach you guys on how to go about analyzing this space and how to execute trades, find entries on different pairs. So today I'm going to just do a top-down analysis on a certain pair, then actually show you how you can actually go about analyzing and as well as placing positions. So make sure you subscribe and drop a comment below, give us some feedback. So I'm going to start with today I'll be analyzing the card JPY, that is the Canadian dollar versus the Japanese yen. So our analysis is top-down analysis. So actually start from bigger time frames to actually see the bigger picture of how the market's actually looking today. So I'm going to switch to a bigger time frame, that is the daily time frame. Okay, so this is the daily time frame. So as you can see on this chart, we're having some impulses and some correction. This was an impulse, this was a correction, and this was an impulse to the upside up to this area right here, and this was what, a correction and an impulse. So this right here looks like another correction, so which means we're actually looking forward for potential buys to the upside. So with that being said, the area that we're going to be focusing on is actually this area. Let me highlight it, this area around here, because we've come from this impulse and this correction, sorry, and this was the impulse. So this is yet another correction. So we actually want to see what will happen next, and the next buys, the next potential move to the what, to the upside. So now that we have the image of how our market is actually moving, let's dive down the time frame. So we go to the 4-hour time frame to actually see these to actually analyze better. So as you can see, what I was just saying, this was an impulse, and this is what, this was a correction, and we're actually looking for another what, for another impulse to what, to the upside. So there's nothing much that you can see here, because this is what, this is a larger time frame. So we need to maybe use the 1-hour time frame to actually draw our trends. So now I'm on the hourly time frame. So guys, in as for me, what I'll start doing before actually taking any positions or placing in positions is actually I want to see the demand and supply line. So how do you support the demand and supply line? So you actually look for these areas around it, these areas, these areas, these areas, these areas can actually help you identify the demand and supply zone. What do you mean by the demand and supply zone? This is the area that is actually tested many times. So I'll take this rectangle, draw my demand and supply line around here, as you can see, and I hope this is clear to you guys. So this is going to be my demand and supply line. Why did I choose this line? If you see from this area, around here, this is the only place, this is the only area that was retested many times. So as you can see, the trend, let me just remove this. So our trend, it came here, broke, retest, went up, came down, went up a little bit, came down, went up a little bit, touched again, went up, then actually broke below. So we're actually waiting for this to break above. That's when we start looking for what, for our buying positions. Okay, let me remove this. So how do I identify our buying position, will actually decide on actually taking a trade or the entry triggers? So now that you see that we're actually going to the upside, so we would want to wait for the trend to break up, give us a form of a retest, or maybe if a candle closes above our area. But we don't just take trades because we are actually above this demand and supply zone. We actually need to draw a trend to actually show us where exactly are we buying and where exactly are we not buying, because we don't want to buy fake outs. Those are traps. So now take my trend line, throw it around, wait. So I'll take my trend, this trend line, and put it around this area right here to be precise, and make sure that my trend is touching the correct spot, that is this area, and this area. So I clone this, take this trend line. Okay, so I take this trend line, then I clone this trend, this bottom trend. This is what you call the twin of this trend line. So now we have something like this. This is actually clear. So what are we waiting for? We're waiting for prices to go up, give us some form of a correction, or a candle that is going to close above this area. That is going to be our entry trigger. So now that we are actually below, let me just extend this way up to maybe make it long. Yeah, so we're actually waiting for this to break above, and we have a candle that is going to close above this price level right here. Then we actually look for buying opportunities to the upside. So I'll be for this position, I'll be taking my buys from this area just above where this trend actually touched, came back. So we're actually waiting for it to break above. So the type of entry that I'm going to be taking will be a buy stop entry. So we have this area right here. Okay, so this is going to be the highest area, my high. This is going to be my low. So I'm actually looking for buying position from this area to actually up to this area right here. So what am I waiting for? I'm waiting for this trend to break, if it can close above, or this trend to broke and actually go to the upside. This is going to be my stop loss. Yeah. Okay, so we're actually looking for buys up to this area. This is going to be my take profit. So we're actually risking about 120 pips and actually gaining 304 pips. So the risk and reward ratio is quite good for those with big accounts. I think they can actually execute this trade. So this is my take on this trade. So make sure, guys, you comment, you like, you subscribe, then you leave suggestion, because more content actually on its way.